Hello, honey peppers. Today, in another episode of HPM Cast, the 41st episode of the second season, we'll talk about gold's major moment. Prices are surging to record highs, and everyone's asking, what is going on? Well, in this explainer, we're diving deep into Herminio Mello's incredible article on honey pepper mix to break down the key forces behind gold's golden moment.
So let's just start with the number that has everybody talking, $3,500. That is the record-breaking price per ounce that gold has just hit. And look, this isn't just some minor market fluctuation. It's a massive signal that has investors all over the world sitting up and paying very close attention.
And that, of course, leads to the big question. Why now? What on earth is happening in 2025 to make gold shine brighter than ever before? We're about to unpack the key drivers behind this absolutely incredible rally.
So here's our game plan. We're going to start by putting this rally into historical context, then we'll dissect the perfect storm of drivers, explore gold's role as a financial shield, walk you through how to invest, help you navigate the risks, and then wrap it all up with the golden takeaway.
All right, let's jump right into our first section and see how this moment really stacks up against other key events in recent history.
When you look back, a really clear pattern starts to emerge. During huge global crises, think the 2008 financial meltdown, the pandemic in 2020, and major geopolitical conflicts, investors have consistently, time and again, turned to gold. Each time, its value just surged, proving its role as that trusted safe haven asset.
But what makes this 2025 rally so incredibly powerful? Well, it's being driven by what the article calls a perfect storm, a convergence of three powerful economic forces, all hitting at the exact same time.
First up, and this is arguably the most influential driver of them all eyes are on the U.S. Federal Reserve. There's this massive market expectation that it's getting ready to cut interest rates.
And this quote just brilliantly explains the logic here. Think about it. When interest-bearing investments like bonds or savings accounts start paying you less, holding an asset like gold, which doesn't pay any interest, suddenly becomes way more appealing. The potential gain you're giving up, what they call the opportunity cost, is just so much lower.
Okay, the second key ingredient in this storm is this growing sense of unease, a sort of anxiety about the overall health of the global economy.
And the economic warning signs for 2025 are pretty clear. You've got GDP growth that's slowing down, unemployment is starting to tick up, and inflation, well, it remains a really persistent concern. This combination is causing a classic flight to safety, pushing investors away from risky assets and straight toward gold.
And rounding out this perfect storm is the constant geopolitical tension and conflict that we're seeing in different parts of the world.
This isn't just a theory. We actually saw it happen in real time. When the conflict in Ukraine started back in 2022, gold prices shot up 15% in just 3 months. That's a textbook example of a flight to safety.
So all these factors combine to really reinforce gold's traditional role, which is acting as a kind of financial shield for the modern investor. And this is absolutely crucial. Gold has proven to be a powerful hedge against inflation. Over the last 50 years, its annualized return of 7.8% didn't just keep pace with inflation, it more than doubled it, actively preserving and even growing an investor's purchasing power. It's this protective quality that explains why so many financial experts recommend a strategic allocation to gold. Dedicating a small but really meaningful slice of a portfolio, usually somewhere between 5 and 10%, can provide critical diversification and stability, especially when other assets are going haywire.
Okay, so understanding the why behind gold's big rally is one thing. The next logical question is, how can you actually invest? Let's explore the 4 main ways to do it. So you have a few distinct paths you can take. You can hold physical gold, like coins or bars. You can invest in super convenient gold ETFs. You could buy shares in mining companies, or you could trade more complex futures contracts. Each route has its own balance of risk, reward, and convenience, and they're really tailored to different types of investors. For anyone just starting out, the process can be simplified into these 4 clear steps. First, decide on your allocation. Then, pick your method. ETFs are often recommended just for their simplicity and low cost. Then, open an account and consider a strategy like dollar-cost averaging to manage that volatility over time.
Now, it is absolutely essential to have a balanced view. No investment is a sure thing, and gold is definitely no exception. So let's take an honest look at the potential risks involved.
There are 3 key risks you really need to keep in mind. First, its price volatility can be sharp. Second, if you buy physical gold, it comes with real storage and security costs. And third, you have to be aware of the specific regulatory and tax rules that apply to your investment.
This really highlights the central trade-off with gold. While it is a fantastic long-term inflation hedge, its short-term volatility is very real. I mean, for instance, after peaking in 2011, the price dropped 30% over the next 4 years. It is never a straight line up.
Okay, so after covering the drivers, the strategies, and the risks, let's pull it all together for the final golden takeaway. What does this all mean for you?
The core message is this: the current market presents a really compelling opportunity. But capitalizing on this golden moment requires more than just jumping in. It really demands a prudent, informed, and strategic approach.
And so we'll leave you with this final thought. With everything we've covered, is now the time to add some shine to your portfolio? To explore this even further, we strongly encourage you to read Herminio Mello's full article on honeypeppermix.com. While you're there, be sure to check out our free downloadable materials. We've got a mind map and a detailed study guide for this very topic. Listen to our other episodes on Spotify and check out our new daily overview videos on YouTube. And of course, follow Honey Pepper Mix on all social media. To stay ahead of the curve, add our RSS feed to your news aggregator. Also, don't forget to subscribe to our newsletter and consider becoming a member for exclusive content. We've got a lot on our roadmap for 2025-26, including a store, events, and much more. And finally, we also recommend reading the other great articles mentioned: How Much is Apple Stock, and What is Bitcoin, and How Does it Work? Honey Peppers, see you on the next episode of HPMcast.